This video, we're going to talk about why, as a systematic trader, I still take discretionary trades. So, this is a question that I got from a subscriber over at Stats Edge Trading. If you want to check that out, again, go to statsedgetrading.com. You can sign up for Stats Edge Pro there, where you'll have quantitative analysis done and symbols that say, hey, if this symbol reaches this price, I have 30 years of data that shows that this is the statistics behind the trade. And that's mainly, I'd say 90% or so, how I trade. And it's one of those things that, again, the question was, because you do this and because, they've seen me do this where I just place trades based 100% off what a system is that I can test, why do sometimes I make discretionary trades? And I think that's a really, really good question. Now, as a systematic trader, we have a couple jobs. The first one is to trade our systems, and that's pretty easy to do, right? It doesn't take a lot of time. I set all the alerts in Discord. If you're a member of Stats Edge Pro, you get Discord alerts sent directly to your phone or your Apple Watch or smart fridge, wherever you are. When one of these gets hit, you can look at the symbol, see if it's something you like, look at the back test and say, okay, am I okay with the statistics if I had traded this thing kind of verbatim? And that's all well and good. The ease of that means that my work has to be put elsewhere. So you don't just build systems, set and forget them. We talk about this a lot on the podcast. If you want to check out Line Your Own Pockets is podcast, which I'm a co-host, and we talk about systematic trading. Our job is to look for the next system. We always know that there is either a system out there that is better than what we're trading now, or a system out there that we can rely on if what we're currently doing stops working, stops getting an edge to it. So how I do that, and one of the reasons I do that, is by taking trades. And I got a perfect example, and this is why I'm making this video right now. So this you may have heard if you heard me on CNBC, and I was talking about this on Trader TV, all over the place, about how much I loved natural gas. And the reason for that was simply the amount of time that we've spent under the 200-day moving average and how the 200-day moving average was acting as resistance over and over and over again. Right? I made a video of this on the channel when I was looking to get involved, and you can see just for years, right? Hit the 200-day moving average, fail, hit the 200-day moving average, fail, over and over and over again. And then we break the 200-day moving average. We come back in at this area. I got involved. I bought some, sold some, bought some, again, trading around this position. But the premise and what we want to talk about this video is this 200-day moving average setup and what we're looking for here. So this is a perfect example of a reason for me to continue to take discretionary trades, and I take them in a completely separate account, right? It's a smaller account, but taking these bets, because this is now the premise of something that I want to look at for a system. So even if you're someone and you have a strategy, and I'm not even going to say you're a quant like me where you can backtest everything, or what we do at Stats Edge Pro. If you're someone that has something that you do, say you're a very successful day trader and you just day trade gaps, there is a big advantage to going in and building, just looking at charts and going through and taking shots, even if they're little tiny shots. You're just taking a little shot here, a little shot there, some systematic style trades, because what will end up happening is sometimes you'll get something that occurs like this. So I want to show one example of something that I had been watching and a setup that actually ended up turning into a system. We can do this with QCOM. Had negative earnings, but we'll just ignore those things. And I want to focus on the purple line up top, and this is the anchored VWAP. So this is one of the systems now that I've actually tweaked, was able to tweak, not create a brand new system, but tweak our trend following system for. So what we ended up doing is I just saw over and over again that a stock that is very strong, as QCOM is, if we can zoom on a weekly chart, you can see this thing's been very strong since that 2023 area, peaks and then spends a period of time under VWAP and then breaks that VWAP. And we can do that right here. See right here, spends a period of time under VWAP and then breaks VWAP. Often you actually can have a good trend out of that. So you see how I saw this setup back here, and now I'm applying it to what I'm seeing right here. So now I can go back and I can test this system, and I can go back and say, what happens if, going back to 30 years, if every time we had these pullbacks, then we're starting to break back through VWAP if we decided to start getting involved. And I know now the statistics behind it. I know the win rate. I know the risk reward. I know all of this data based off of this. And then I can apply this to current systems that I have. So this wouldn't be something that I could do at all unless I sat there and did this work. So this is our trend following system, right? I have a video about it. We have all of the rules listed here. So, right, we'd say we hold between 5 and 10 names based off risk tolerance. We have each month of what would happen if you traded this system. So there's absolutely nothing hidden here. And you can see a setup. So we have all this over at Stats Edge Pro. But the point is that I would not have been able to improve this trend following system, something I've been running for a long time, if I had not been kind of in there in the nitty gritty trying to look for trades. So the point is that whatever you're doing, kind of branch out and do other things. If you're somebody who is purely systematically trading, day trading, or if you're someone who trades Forex, or if you're someone who trades futures, take a little bit, doesn't couple $100, right? Doesn't have to be a lot of money. Take a little bit of money and start playing in different aspects. If you're someone who just trades equity, start playing in Forex. These kind of experimentation is one of those things that we are looking to learn from. We're looking to say, oh, I've been experimenting and I noticed that when this thing happens, it seems like this thing happens. That's how the idea starts. Then I take that to the back tester, I program it in, I start back testing that system. So that is why you'll see me talk a lot about discretionary trades, even when I'm primarily a systematic trader, because I hope the trades work out. I hope the trades make money. My bread and butter is probably going to come from the systematic trades. But hey, if UNG triples, maybe we'll get a hot tub or something, right? That's the kind of thing we're looking for. It's not what I'm going to rely on. I'm going to rely on my systems, but sometimes by experimenting, you find something that is a new setup, a new system, something you can program in, something you can make more systematic, but you never would have discovered unless you did that playing. So go play.